All right, let's get started. And I'm glad this mic works. I think it's the scratchiest ones, but luckily I won't be doing most of the talking because I'm just moderating. So, hi everyone, I'm Indeana Underhill. I probably, if you're a HollyShorts filmmaker, read your name wrong during the live stream announcement. However, we tried our best, so thank you for bearing with us. And then thank you for coming to our first ever HollyShorts Kickoff Summit today. Education is a huge part of our industry and growing together, and so we're really happy that HollyShorts let us put this on for all the selected filmmakers and some members of our community. Now we're kicking off the day with a panel that I really needed on this list because I think what we're doing as artists is great, but I think a lot of people have to really very quickly learn the business side of it. And it's really wise to be aware and have all the context around the business side of it. And so that's why we entitled this panel Pay Yourself, because we need to get paid as artists. And so we have two incredible panelists here who I'm going to read their wonderful bios out, although I know them now because we've been chatting. And Gabo directly works with our nonprofit. But Gabriel Huen is the CEO and founder of Glide Consulting, which is a bookkeeping and accounting firm. They work with independent and startup businesses, scaling from 0+. And not only that, but he works at Coinbase as one of the cool higher ups. So he knows a lot about the state of our industry and the state of the economy. He has over 12 years of experience helping companies develop and scale their business, having worked in the CPG, food and beverages, private equity, and SaaS industries. As a founding partner at Glide, he uses his breadth of knowledge to help e-commerce brands understand their current financial position in order to develop a strategy for effective growth. So this is great because the other person I'm about to introduce, who is Meyoung Spektor at First Entertainment Credit Union, is on the other side, is a very different side of it. So you're going to be getting a good, well-rounded perspective today. So Meyoung brings over 2 decades of expertise in residential mortgage lending and business development over at First Entertainment Credit Union and is dedicated to serving the entertainment community. She leads initiatives that blend financial wellness, inclusive solutions, and strategic outreach. Also a proud SAG-AFTRA member. Thank you for being a part of that. Meyoung bridges her background in finance and the creative industries to understand the unique needs of storytellers and freelancers. Through grassroots engagement, educational workshops, sponsorships, and industry panels, we love all of those things, she champions connection, purpose, and measurable impact, making financial services more accessible to creatives and their communities. Welcome. Awesome. Now, let's get started. Yeah, clap. They're here. They made it. They bared the hill like you guys. All right. I have a long list of questions. I doubt we'll get to all of them because I'm sure it'll spark conversation. I want to start with something that's just always I'm getting asked. I'm always thinking about in terms of taxation. What's the difference between just freelancing under your own name and setting up an LLC or an S corp?
You want me to start it?
Anyone? Yeah. Whoever wants to take it.
So freelancer, I would say, if you think about it just like Jane Doe, the filmmaker, and when you think about LLC, you can think about it like Jane Doe, the enterprise. There are tax implications that change where they differ, but I think from a holistic level, that's kind of like the best way to think about it and approach it, or the most simple way. I would say if you're starting off as a freelancer, I think that's, you should kind of just be able to work and see how do you generate income and revenue, and then as that income become more consistent, if there is any IP that you want to protect, I think that's when you should start thinking about creating an LLC or something like that. So, yeah.
Yeah, and I'll just jump on piggyback off of that. So just in my years as a mortgage lender, I've looked at more tax returns than you want to know. And essentially what we look at when you're a freelancer, you're usually getting paid if you're an actor or someone that's working below the line. You're getting paid W-2s, and you might get 5 to 10 W-2s depending on how many gigs you're working on during the year. When you're a freelancer, that we actually consider that freelance, but you're getting paid a W-2 from, let's say, cast and crew or entertainment partners, correct? Now, you also might have your own side gigs where you're getting paid a 1099, which means that taxes aren't coming out of that. and you're just getting paid the full amount from whatever you've negotiated for that project. So both can be considered freelance. And so the way that when you're going to apply for, let's say, a home loan, when you're a freelancer, we'll look at your income and we'll average it over a couple of years, and that's how we determine your income. When you decide to incorporate, it changes the ball game. And so what usually happens for the actors that I've done loans for is that once you start to, let's say your revenue's coming in, your gross income for the year, let's say it's 100,000, just to keep the math simple for all of us. If you're getting paid W-2s, you're not getting to write off anything against that, right? We used to back in the day, but not anymore. And so the advantage when you decide to incorporate is that you will now have a way to write off all of your expenses for everything that you're doing as part of the production. So if you are getting that 1099 income, that is something you would report on your tax return under something called a Schedule C. How many of you are familiar with Schedule Cs? Yeah, so when you do a Schedule C, you're more of a sole proprietor, also a freelancer, right? And then you can start to itemize your expenses against that income, which is fantastic. And you bring down your tax liability. So I would say that when you are getting a lot of W-2s and you're finding that I'm getting taxed a lot and I'm not having any relief with all the expenses, that's when people start to think about incorporating, because that's the only way that you can reduce your tax liability. And it also protects you just from a business liability standpoint as well.
Oh, Jesus. That was me clapping. Because I'm thrilled by this. I love conversations like this, just like transparent conversations. Big purveyor of TikTok over here. Love TikTok. No, I didn't. I listened to something the other day. I watched it on TikTok. Would you guys touch on bank statement loans versus like normal FHA loans?
I'll take I can take that one. So essentially, loans are either considered conventional or non-conventional. And so if you're going to one of the big banks or a credit union like First Entertainment, we're going to have guidelines that all lenders are following. Their federal guidelines are set by Fannie Mae and Freddie Mac. And so with those kind of loans, they're going to look at what I just talked about. They're going to ask you for 2 years of tax returns, and they're going to look at what your net income is if you're self-employed and you're filing that Schedule C. This is a huge mistake where a lot of people, when they're applying for a loan, let's say we're talking to them, and let's say you're making, again, the $100,000 a year, but you're getting it in a 1099. Now, do you think that as a lender, we're going to look at the $100,000 you're making on that 1099, or are we going to look at your income off of after all of your write-offs? Let's say you have $90,000 worth of write-offs against that $100,000. Do you think we're going to look at your income based on $100,000, which is the revenue, or the $10,000, which is the net income? We look at the net income. And so that's something to be aware of when you're applying for a loan with a national lender that's following those conventional loan guidelines. To your point, Indy, when your tax returns are going to look like that, and it's going to look like you only make $10,000 in income, net income, even though you're earning $100,000, that's where bank statement loans come into play. Those are usually sometimes loan brokers do those, or just lenders that can do unique loans. And what they're going to look at that is they're going to look at the number of deposits you're getting on a monthly basis going into your bank account, into your business banking account. And then they have guidelines where they can average that. So they're not looking at your expenses against that. So in that case, they're going to see $100,000 of deposits coming into your account. So you might qualify for more, right? Because they're not looking at the net. So although those programs are great, and it's great that they exist for people in entertainment, the rates are usually higher, and also they're going to be looking for higher down payments. Whereas on FHA, that's a loan, that's Federal Housing Administration loan, where you only need 3.5% down to buy a home. We actually have a 100% financing home loan at First Entertainment. Awesome. 0 down, yeah. So just keep that in mind too. So there's very low down payment options that you can have as entertainers.
Awesome. Okay, I'm gonna try this again. I'm gonna keep it on from now on. That's fantastic. It's good to know because TikTok never tells you the downside. So thank you for letting me know about those higher rates. This is why we had this panel, so I could just wiki all my questions with you guys. Now, what's the difference between starting an LLC versus an S corp when it comes to taxes and getting paid, and also when is it worth it to have an S corp?
You can start,
I think, in my opinion, I try to keep things very simplistic. Once you start earning roughly like $50,000 a year, I would say create an LLC. I think so the biggest difference is that when you are a LLC, you get charged or you get taxed at a self-employment tax, which is 15.3%. When you are a S corp, you will be taxed as an employee for your company, right? And so there is a tax gain, so a reduction of your tax liability between the LLC and the S corp. Other than that, the structures act pretty similar. The LLC and the S corp, there's not much difference. It's just that basically you're able to reduce your tax exposure, your tax liability every year by becoming an employee of that entity. And yeah, so $50,000 roughly. I think each case is different. Again, a lot of entertainers have a lot of IP, right? So if you want to preserve your IP, that's also very important. That's where I will consider, like, obviously creating copywriting and all that kind of stuff, and that has value, right? So I think that is also important to consider when you're thinking about opening an LLC or an S corp. Is that it's not only the income aspect of things, but also what value of that property you guys are trying to preserve, because otherwise the liability or the exposures you can have as a person, if something happens, let's say like a lawsuit or something like that, I think it's important to just always try to protect your IP as much as you can. So I think these structures are built for that. So
I would just add also that you're exactly right. And I would also add that when you have an S corp, you can actually pay yourself a salary, and you're an officer of your corporation. And so when you pay yourself that W-2, you're paying payroll taxes on that, which means that you're paying into the Social Security system, which that income counts towards that later. And if you are paying into any type of pension plan, like a SAG-AFTRA pension plan, then those earnings can actually go to that as well. So that's where an S corp, if depending on what kind of income you're earning, that's a great way to have part of your income. If we use the same $100,000 example, you could pay yourself a salary of $50,000. You could write off your expenses against the rest of it. And then whatever is left, you get paid in something called a K-1. It's your net income. And that income it's not taxed, it's a distribution. Now, we're not tax advisors or attorneys, so please.
Not financial advice.
We're not, this
advice.
is not financial advice.
Before,
I'm not telling you to open a crypto account or anything. But these are just things that I've seen from 20 years of looking at tax returns of entertainers, and I can tell you that's what they do, and I can tell you how we look at that from an underwriting standpoint. So those are the advantages also for an S corp.
Awesome. This is so great. And also something in terms of protection that I learned is, because you don't want to, if you get sued, you only want the LLC or the S corp to be attacked rather than yourself and all your assets, and that's why you would also put stuff under the LLC. But you should never put your LLC as your own name, because then they can go after you, right? That's kind of the thing, I think.
Well, the biggest difference is that the LLC and the S corp, they still go through your personal taxes, right? Like even when you file, that will flow through. Like the LLC acts as, like, they call it like a pass through. That you will then put into your personal taxes. If you want to avoid completely that, and I think this is seen more when like they're big productions, is that they create a C corp, where all the liability, all the profit and losses, all the IP stays at the C corp, and none of the people you can attach a LLC to it as well, but you won't have that exposure, individual exposure, if you have a C corp up front. But again, it just depends of, like, there's so many variables. It depends on the size of where you're at. It depends of what projects you're looking at. It depends on what type of service you're providing. I think if you guys are filmmakers and are trying to start like create your own project, I think there is nothing wrong to just start with a sole proprietor LLC. And if the project grows and hopefully you guys raise $5 million for your next project, then you can think about kind of just turning your LLC into a C Corp. But I think to start and to keeping things very simple, if you start with an LLC, just know that that's going to flow through to your personal taxes.
And some productions, they want to be able to pay your S Corp. They're also known as loan out corps. So they don't want to pay you in your individual name. So they may ask you, what is your S Corp? So for me, it wouldn't be Meyoung Spektor. It could be, LA Girl Productions, right? And so when I get paid from that production, it's going to get paid to LA Girl Productions. And then I will pay myself, Meyoung Spektor, a salary from my S Corp. And then I'll also get to write off all those great expenses against my income to lower my tax liability. And then whatever's left will still help me when I'm trying to qualify for things like a home loan or a personal loan or things that can help fund your projects.
Awesome. Thank you. Now, what's a credit union? Why would we join a credit union? I've heard this is also probably, I spend way too much time on TikTok, guys. I first heard about credit unions. My friend joined a credit union, maybe yours. And when I first moved to LA, he's like, you need to get I'm Canadian. You need to get your American card or credit union. I was like, okay, I still have my Canadian card right now. We won't talk about why. However, what I learned like last year was that credit unions, you know where your money is going and you know where your money, how it's preserved. And it's kind of like, correct me if I'm wrong, but more of a co-op initiative versus big banks obviously fund things you might not ethically be okay with. You don't know where your money's going. And so I heard it's like kind of a more mental clarity, ethically good, sound decision. But what's a credit union? Why do we join? Correct me if I'm wrong.
I love that question. I love the way you answered it. You actually answered it perfectly.
I'm the third panelist.
Yeah,
I'm just weighing in from like
thank you.
the layman area over here.
No, thank you for saying that. So coming from big banks my entire career, I've been at First Entertainment for 2.5 years, and I wish I would have known about the credit union world sooner because that's what it is. Every I'm sure you all have heard of different credit unions. They all have their specific area of focus. Some focus on teachers, some firefighters, some military. First Entertainment, it's in our name. We focus on the entertainment industry. That means we understand the way entertainers work, get paid. So we design our programs, to your point. We can specifically, because we know what our membership base is, we design our programs to help you. And I'll give you one example that I love to talk about. We're not for profit, right? So all of our net profits, they get reinvested back into the credit union. So instead of paying out shareholders, guess who we're paying out? You, because you're a member owner. And so what does that show up? That shows up in lower rates, lower fees on banking products, higher yields on savings and things like that. So that's one of the benefits. One of the things that we did during the strike year, which was really tough from everybody, above the line, below the line, everywhere, in order to, again, could have never done this at the big banks, but normally, obviously, people suffered that year. Their income was low, right? And so what we did is in 2024, when people are applying for home loans, we just said, it didn't happen. It didn't happen. Let us know when you've reestablished your income. We looked at what you made in 2022 and 2024. Could never, again, we designed that. That's our program. So that's what we do to make sure that entertainers, we cater our programs to you and help you figure out how to get you approved for the things you need to get approved for. We also, our board of directors, for most credit unions, they don't get paid. They come from the industry. They're experts in the industry, so they advise our leaders on the programs that are relevant to all of you in this room. And we're also insured. Just like banks are insured by the FDIC, we're insured by the NCUA, the National Credit Union Administration. So your money's protected, just like banks are up to that $250,000 max. And there's all kinds of rules behind that. But so just know your money's just as safe. It's just more deliberate. To your point, in India, it just helps you get to pick and choose who really understands you and who understands your community.
I keep turning this mic off by accident. Now I'm afraid I'm going to scare everyone. Let's talk about separating money in accounts. So How do we start an LLC? Maybe a bunch of us want to start a production company after this conversation because we all want to work together and we all want to start an LLC together for, you know, the LA Girl Productions. How do we separate? What's the advisement on separating for tracking expenses versus project money, personal money, loans? Like, how does it all work in terms of expensing and accounting and tracking mileage? What are the smart practices, really?
Yeah. Again, I'll keep it simple. Personal should be one bank account. It's very easy nowadays to open bank accounts. If you don't know, we can chat about it later. But keeping everything separate. Personal should be just one bank account. Production should be one bank account, and savings should be one bank account. Right? I think that's the most simplistic way to do it. And obviously, if you open up an LLC, you will have an account for the LLC, and sometimes depending on the balances that you'll be carrying over from an LLC perspective, you can open like a savings accounts on the LLC as well, right? Like, but again, keep it simple. I wouldn't try to overthink it. Just personal does only the personal things. Production, just do all the production things or LLC things, and then just savings accounts is under personal. So.
I agree with that. Yeah, it's just really important not to commingle the money, because also when you're trying to apply for different loans, they're going to ask for business bank statements. And so if you're like, yeah, but they, you know, they paid, they transferred into my personal account. That's not going. When banks want to look at the stream and flow of your average deposits for your business income, you want to have it separated, like you were just saying.
What is the smartest ways to build credit?
You want me to take that? I can add a couple of things that have worked for me personally and my corporations. I think it's mainly just opening a credit card or something of that sort, right? Making sure that you're using it up to roughly 30% is recommended, and making sure that you're paying that off every month. That would be the best way to just start increasing your credit. Then after, let's say, 6 months passes, depending on where the rates are at, you can request an extension or like increase your limits, and that will help you obviously even reduce your amount of usage that you're having on your credit card. And then it's just a cycle. Like every 6 to 12 months, you should be requesting an increase, and you will see that in the next 2-3 years, you will be able to have a pretty big credit limit that you can just, use at your disposal. And also you will have a better credit record, right? I think there is also now, with like the growth of financial instruments and whatnot, there are other type of more alternative like applications. One of them is called Built, that you can use your rent payments.
Haley does that.
Yeah,
Haley,
you can use your rent payments.
My co-founder does Built. Built's amazing. You have to find her. She's in a floral dress doing something around here. She looks like me, but florals. I'm just going to add on to this because like we talk about Built all the time.
Yeah.
You have to let me know if you agree with it. Do you think it's good?
I think it's great because anything reported on a credit
score,
report will help build your score.
You can pay your rent with it. They're actually now you can finance a home on it. You can pay your mortgage on it now. They just announced that apparently.
I'm not familiar with that.
Yeah, that's what Haley got in her terms recently.
Okay.
And the best part is like you get points for all of it. She was using it too much that they called her and capped her limit, even though she kept paying it off every month because she was getting too many good things out of it by getting to pay off her rent with the points because she used it for everything. So anyway, Built, check it out, BILT. Anyway,
yeah,
sorry,
BILT, basically you can use, it's basically like it acts as a credit card, right? And the same way that you pay a rent right now, I don't know if you pay a landlord or a company, you kind of bill becomes like an intermediary. This my English gets in the way, so sorry. But you will pay Built, right? And that payment of that card acts as essentially like you are paying your credit card. So
they'll even write a check for you. So if your landlord only accepts checks, they'll actually they'll send the check for you. Anyway.
And then that works for your credit score. That will increase your credit score. So there's alternative ways that you can do it. But all of those, I think I'm in favor of, as long as you're able and you're consistent about paying your bills every month. That's the way that I would approach it. Yeah.
And the only thing I'll add to that is that for some people, I've seen people come back from bankruptcies and in 2 years, their credit score is over 700. So if there's anyone here that has a credit score under 500 or 600, maybe 500 too, you can come back from that. And it's by just slowly using the tools that you just mentioned. And one of the ways to do that is to start out with something called a secure credit card. So most lenders will offer this credit card where it's essentially secured. It's tied to a savings account. So for example, let's say you have $500 in savings. Your credit card will have a limit of $500, and then you'll go out, you'll use it, you'll borrow, pay back, because it's all about a history of how good are you at borrowing money and paying it back. If you turn to your left or right, and that person sitting next to you asked if they could borrow $10,000 from you, you don't know who they are. The only way that you would know if you want to lend them money is based on a score that represents how good you are at borrowing money and paying it back on time. So that's what a secure credit card can help you do, because if right now you're not getting any credit card offers and you can't get credit, you start there, because after 12 months of you borrowing money, paying it back on time, then you're going to start to get more credit card offers. Even from that institution you went to, they might start offering you more of the regular credit cards with the higher limits. And as you just mentioned, if you can keep your credit card limit, your balance less than 30% of the overall limit, that's how you'll continue to increase your score. So the key is just pay things on time. Get yourself set up on auto payments so you don't forget. If you have a score that's below 600 right now, don't worry, go get yourself a secure card. Also, you can call your utilities without using Bilt and just say, hey, I want this reportable on my credit bureau. So will help build that. And in mortgage, we have things like non-traditional credit where you don't have to have a credit score. You can just show that you've had on-time payments with utilities, with your property owners paying your rent on time. So there's all kinds of other great ways, but the number one key is you got to pay your bills on time.
Awesome. That's great. And I hope everyone's taking notes, because I'm not, and I will be taking photos of your notes after. Okay, I think a lot of people know maybe what write-offs are, but some people might just be nodding their head and actually not know what you mean when you say write-off. Can we define write-off, and can we also, from an entertainment or just general human being freelancer perspective, talk about what you can and cannot write off?
I would say it's a kind of great concept, right? Because, but again, this is not financial advice. It's not legal advice or any of that sort. But I would say you have to make sure that it is directly related to your service that you provide, right? Let's say you are a DP. You can write off on equipment, right? And write-offs are essentially a deduction of your taxable income, right? That's the simplest way to define it. And if you're in this example, if you're a DP and you have equipment, you can write that off because you can say that is part of my expenses of like for me to provide this service, right? As opposed to if you say like I'm a DP and I bought clothes, that's harder to justify as a operating expense, right? So you gotta always think about it that you are the CEO of your business. And as a CEO of your business, you will have like whatever income you guys receive. If it's service from doing photography, then those expenses need to be directly related to the service that you provide. Otherwise, it just becomes a really hard to justify to the IRS as of why this business is related, and then you will have to provide more additional documentation, which I don't think anybody has time or bandwidth to deal with. So I would say just try to be conservative in that aspect as much as you can. And if you have doubts, I would say reach out to us, to whatever your tax advisor is, and just ask, because I think that's the best way. And not now with ChatGPT, obviously you guys can also be asking this question. So
it's the best tax advisor out there, ChatGPT.
I don't know about
free,
that,
right?
but yeah, it helps.
I'm kidding again. That was not tax advice. So what I will say though also is, so in my example, going back to the $100,000 that we're all making in revenue, if you have, if you're working out of your home, you can deduct a certain percentage of your home, figure out go and get that measuring tape and figure out what square footage of your home is allocated to a home office. You can take a percentage of your rent or your mortgage and write that off, and your telephone bill and your internet. And so you just want to make sure that, yes, the rent is relevant to your business. I see a lot of things on tax returns, business tax returns, where someone has a really nice car, but if they use it to go to meet for appointments and things like that, guess what? Leases, they write those off on their business for your vehicle, because you got to get to and from your meetings, right? So the whole point, though, is if you've got 100,000 in revenues, and whatever the expenses are that's reducing that revenue, that is a write-off. That is an expense against your revenue, and then you only are going to get taxed on what's left. And that's why people want to have a lot of write-offs and a lot of expenses. So that's just in a nutshell.
Awesome. I do write off festival passes, so like HollyShorts pass, travel to festivals, my meter to go to lunch and the lunch itself.
Absolutely.
Like I just think when you start to look at it, you're like, oh God, like I think in LA we're like workaholics a lot, right? And we're not getting paid for most of that work because a lot of it is prep or auditions or getting to the meeting, or, even prep days. I'm a DP, even prep days as a DP, a lot of them on smaller projects aren't paid, but like we can write off a lot of the expenses associated to help offset that cost at the end of the year in taxes. So that's awesome. That's great. Something I also wanted to talk about was how do you decide what to pay yourself as a salary if you're paying out through an S corp?
I would say just be reasonable. Like, how much will you pay somebody else to do that job, right? And find comps. I would say, like, if you are able to use ChatGPT or you have other people in the business and the industry that you know of and know how much they charge for that specific service, that's how much you should be paying yourself. I think it has to be, you should just act that you are just another member of the crew. Think about it that way, as just as a third person. How much would you pay this person, right? And I think that will be the reasonable amount that you should pay.
Absolutely. And then also talk to your tax advisor about the things that we talked about earlier. If you want some of your salary to go towards Social Security earnings later, or if you were trying to qualify for health insurance through the union, then you'd want to work that out with them. I've seen S corps that have income of upwards of, let's say, $800 or $1 million, but the person who owns the S corp, they only pay themselves a salary of, let's say, 100,000. So, right, and then the rest of it they'll get in something called a K1, all the net income. So definitely talk to your tax advisor about that, but it's not something where usually people, if you're getting revenues of $1 million, you're not going to pay yourself a salary of 500,000. It's probably not, talk to your tax advisor about that and figure out how to both protect yourself from a legal liability standpoint, also from a tax liability standpoint.
Awesome. When do you start to hire someone to help you with bookkeeping? At what point would you say, like, let's get another team member on board here rather than do it myself?
I would say whenever it's taking you more than 2 hours per week to kind of work on your books, I think that's a good kind of measuring tape. When you have employees, I think doing payroll start getting a little bit more complex. And when you are taking too much time away from your creative work, if you are in the midst of like producing a film or whatever it may be, I think that's always helpful, because I'm more of the working smarter, not harder camp. So I would say if this is just creating additional stress, which what already brings creating a film, I would say try to bring somebody. I think there is a lot of opportunities now onshore and offshore that you can leverage. We provide services that we have here onshore and offshore, so we have a lot of leeway when it comes to fees, right? And we try to adjust it to the industry. That way you guys are able to focus more on what you do best, which is creating film, being creative and whatnot. So
yeah, very good.
Thanks. Credit union talk. Let's get into it. How do we switch over to a credit union from where we currently are if we're at a big bank? And what are some things we need to keep in mind that are different from big bank when dealing from the day-to-day of a credit union?
Absolutely. Well, that's a great question. So, what I'd love to say is our team is here from First Entertainment. They're right over back there, and they're going to be downstairs.
And we also have a pool deck set up for you guys, right?
Yes,
cool.
We're on the pool. We're
Yeah.
at the pool deck, and we brought you something very special. So with everything that I've kind of told you about today, the way that we cater to entertainers, how we look at your income differently and very creatively so you can get approved for more loans that might help fund your next project. We are usually the next question I get is, well, how much is it to join? Because it's membership based. Well, today we're actually paying you to join. So we have an offer for up to $400 when you join. Ask the ladies; they'll be telling you more about it. But essentially, some of the benefits that we offer are that you can get paid 3 days early. So if you're normally going to get paid on a Friday, you'll get your paycheck earlier. Who doesn't want to get paid earlier? And everything is digital with us. We're digital first, so you can do all your banking from your mobile phone. You can join in 10 minutes from your phone. So it's super easy. And and then for our field of membership, if you're at an event like this, even if you're not working with one of the 300 plus entertainment companies that we partner with, you will be eligible for that offer just because you're at this event. Normally, our field of a membership is you need to be part of a certain entertainment group. But again, if you're here today, you're eligible for that offer. Also, we extend it to the LA community. A lot of times we're at events where you might not work for one of our 300 plus entertainment companies that we partner with, but you might live in LA County. You're eligible for membership if you live in LA County as well. So we'd love to work with you. I'm passionate about entertainers because I'm one of you. I just happen to have a 20-year career in finance too, but I love knowing both sides of it. And one thing that I'd love to add just to the previous question is, no matter how uncomfortable you are with the finance side, because we're all creatives and we all left brain, right brain, more one or the other, I think it's so important to understand your finances. I've done loans for people where they have a business manager and, you want to know what's going on. You want to know what's going on. So even if it's just you starting out with an Excel spreadsheet, these are my expenses, here's my income, let it do the math, and that could be your QuickBooks for to start. Then once you start getting employees and things start getting larger, at least you know the basics, and then work smarter, not harder, and outsource that to someone that can get it done faster. But at least start with the basics, understand what an income statement is, your balance sheet, all of those things. Those aren't hard concepts to just get an initial grasp of. And that way you know where your money is going, and that'll protect you in the long term as you grow your money over time.
Amazing. And also, I didn't know she was going to announce that. So, thank you so much for doing that. That is so sweet. Your bio said accessibility. Thank you for making this accessible and staying true to your word in your bio.
Yes.
That's awesome. I mean, that's just so sweet of you. And let's talk about making that long term with our community. We'll talk.
Okay.
Putting you on the spot. Mortgages. That's terrifying, I think, for a lot of creatives who are trying to figure it out, or in between projects a lot, or prepping for a project. We talked a little bit about, the types of loans and things like that, but starting right now, I can't afford a home right now, but starting right now, what are the things that I can do when looking at the jobs I'm taking, or how I'm portioning my salary, or preparing the best so that, whenever I want to buy a house, if I want to buy a house 5, 7, 10 years from now, that I can be in the best position to come to you with that, for that mortgage or that lending?
Absolutely. It's a great question. I'd say the number one thing you can do is to make sure that your net income is at a level where you can qualify for something. Again, lenders, whether it's First Entertainment or any other lender, they're going to look at your total income coming in after all of the expenses and write-offs if you're self-employed. So I think that's the number one thing that prevents people who are in the industry from maybe qualifying for something, is that they write everything off because they don't want to pay taxes. No one likes to pay taxes, but when you're in the market for a home, you got to bite the bullet for a couple years and pay some taxes, show some good income so that you can qualify for something. The other thing is that, when you're buying a home, you don't have to just do it by yourself. You can do it with a group of, maybe a friend, or, buy a duplex together, combine your incomes. You can have several people on an application. We have one right now where 4 people are on that application, and they're all qualifying to buy a beautiful home with 3% down. So there are really low down payment options. And so also, if let's say you love where you live, your rent control, you're like, I'm not moving. I've had people like that where they're living, 3 blocks from the beach, rent control, they're not moving. But guess what? They want to own rental property. So buy a rental property. All of that, we could go into a whole other thing about what that does to bring down your tax liability. But just, you know what I would say? Just have a conversation with someone in mortgage. Have a plan. Have them just get you set up for what's possible, even if it's not right now. And you'd be surprised at the kind of things we can structure to make things possible in the future, even if you're going to buy out of state where it's more maybe affordable, a rental property out of state. But just know that real estate is accessible in certain communities if you just know how to structure your tax returns correctly, right? You got to file tax returns. Number one, we have to look at something to calculate your income. That's number one. If you're, I see some people nodding their heads. So just get caught up. It's never too late to start.
Awesome. Gabo, can we talk about Gly a little, why you started it? Because it was for startups and for people kind of getting into their own companies. And I know we have a lot of filmmakers here who probably have a production company or are thinking of starting one and want to play it safe and smart. How do bookkeeping firms and accounting firms like yours provide support for independent filmmakers?
Yeah, I think it goes back to my original point of trying to simplify. The whole reason why Gly started is that back in 2020, the pandemic happens, and I just decided to provide some freelance services outside of like the kind of regular 9 to 5 that I had, and then all of a sudden found that there's a ton of people that are in need, right? Like that typically you don't get the best graded type of accounting services or tax advice because you don't have the income to be able to do so or whatnot. So me and my team have years of experience in the finance industry. My team is former financial auditors from Big Four accounting firms. So, and they're here and overseas as well. So we have been able to customize a lot of our the needs from our customers, right? Like, and we started in e-commerce and SaaS businesses because that's where my background is coming from. But we soon were able to see, obviously, working us working together, is that it's not only on one industry, right? And so that's why we started this business. That now we want to take you away, basically, from that nagging, having to do all your expenses and having to reconcile your accounts and all that kind of stuff. Like, we do all that for you. Like, we will take care of it. You will just receive a report at month end or the end of the month. You will see how much the income is. You'll see how much your expenses are. And we will have those conversations. Those conversations that Meyoung is saying is that, what is the strategy? Like, think about long term, what you want to show in your tax returns, right? Like, all those conversations we can have and kind of try to help you get to there. We also kind of just started our own production company with my co-founder Ariana, who's back there, who she's obviously focused on the creative side. I do more of the financial side. But the benefit of that is that once you have a production company that has the background in finance, we can make that whole process more efficient, right? You don't have to continue to go outsource to find services. Rather, it's within like the co-production area. So that's kind of how we think about it.
Awesome. And I have 2 more questions before we open it up. Meyoung, can you talk about, you're a creator yourself and you're in SAG-AFTRA. Can you speak about some of the smartest things you've seen actors do for their finances or working with the credit union that you might recommend, whether they be tools or just like getting in the mindset of an actor, tips that you might have?
Absolutely. I would say the number one thing is to, as you start getting paid, actors, sometimes they get on a really great project and they get a really big check and then they act on that. And I would say that they'll, let's say they qualify for a great home at that price point of based on whatever their series regular on a show, let's say, or even executives in entertainment that start out with very high salaries, because it's an industry of variable income. And it's like this. I would recommend that you never make financial decisions based on the height of your income. Always make it based on maybe a mid-year or even low. If you can live off of the lowest income that you've made and make those decisions, then you'll live with less stress, and then you can save. You can do other things with your financial future. That would be the number one thing. And then the other thing is to just when you're on a job and you're currently earning income is the time to apply for loans. So a lot of people will come when they just finished a project or they're in hiatus, and that's not the best time. You want to do it while you can show a current ability to repay. At First Entertainment, we do understand hiatus, we understand residuals, we understand all those terms that maybe other institutions might not because we cater to you. But I would still say it's good for you to, to plan for those, just to understand kind of the ups and downs and to definitely apply if if you're in the market for an auto loan, personal loan, home loan, anything like that, do it while you're currently on a project.
And I think that's a good point. Like if you get a big check, like don't spend it all. Like just try to make sure you leave something for your taxes, like 30% roughly to make sure you pay your taxes. That way you can go to Meyoung and ask for a loan. I was saying, right? So
the best piece of advice I ever got from a huge GP when I was studying in school was he came in and he was like, I did what you're saying is like live below your means, right? So it's not ever work from the highest. And he said, the biggest issue he had, and he had to give up a huge part of his career, was because at the height of his career, he decided to pretty much live where he can't take a job that paid lower than that. So he had a nice car, he had kids in like the best schools, he had 4 properties, they had memberships at golf clubs, like they really went above and beyond, and that was at the height of the career. And then it cost him that to maintain it every month. And so when he wanted to do the smaller projects, or he wanted to do the passion projects, or he wanted as a DP to like try directing, he couldn't, because it cost him too much to maintain his current lifestyle. And I was like, so now I'm always like, okay, live below your means. Like that's how I needed it ingrained in me, by seeing someone else's kind of artistic vision be like a little stunted at that idea. So I love that you mentioned live below your means, both of you. So that's awesome.
I also would love to just add, it's really great and takes the stress and pressure off if you have multiple streams of income, and not to be ashamed of some. I know a lot of creators that they have a 9-to-5. But they've told me that, you know what, because I have that and that gives me that income stability, I've never created more. I've never written more short films. I've never submitted more, because I just don't have that stress of survival every day and waiting for it. So it's actually very empowering sometimes to have just I think some people might think of it as, oh, I gave up. No, you're just getting started. It just gives you that foundation so that you can pursue that creativity without the stress. So whatever that means for you, it could be podcasting. It could be getting, a part-time job at Trader Joe's. It could be whatever. But I just don't want you to feel like you're giving up on your dream if you decide to go the 9-to-5 route.
Awesome. Thank you. Last question I have, and we may have talked to this because we talked about build. I want people to leave here writing in their notes your favorite apps or software or things that they can go do some research on. So whether it be to track mileage or receipts or anything like that, what are your favorite tools? Maybe apps or software?
Go ahead.
Yeah, I mean, there are basic ones. If you have a production or LLC, I would say you should have QuickBooks. I think that's very easy. I will try steer away from having your financials in a spreadsheet. I think that's very subject to like margin of error. So I would say that's one. Then build to be able to increase your credit score. There's a ton of credit card offerings out there, like with zero APY in the first couple of years. So I think that if you look it up online, that should be also pretty good offerings where you can start building your credit score without having to pay the interest. I think those 3 are to start are not bad.
Yeah, those are great. I personally love Rocket Money. I love any app that when it pulls from whoever you bank with, and it'll categorize your money. So you're like, oh, I'm spending a little too much on DoorDash this month, or or shopping or whatever, or on those subscriptions that we forget we're paying that $20 a month to Actors Access or any of those things that you should have canceled. So so it's really great to get tools like that. There's Mint. There's just those. They essentially, you can get them on your mobile phone and it categorizes your money. And then to your point, what I see most self-employed people using is QuickBooks. And then you can also set up payroll on that, where you can Also, so you're paying yourself through into it, and then also you can send out invoices on it, which is super convenient for your vendors, where they can just click on it, it goes straight to, and so you're not having to do the whole paper chase game of checks. And I don't know, does anyone use checks anymore? But it's one of those things. So yeah.
My therapist takes checks. And to give no further context to that, I'm going to open up questions here. We have one over here. Hello. Was there a bug earlier? I heard you guys laughing. Was it one of those big beetles? Yeah, they're very friendly. If we see Haley, she likes capturing them. She will safely put it away. We are kind of in the woods here. There are actually scorpions. So keep an eye out for them. They're called desert harries, I think, or something. Anyway, yes, first question.
You want me to start?
Yeah, go ahead.
Yeah. I would say it depends all on circumstances that we will have to go into details. But high level, I would say that um, everything should be in an operating agreement. If you don't have an operating agreement on the LLC, I think you guys should build one. I would say that creating the change of like the partnership and whatnot is not that difficult. I think even you can do it through legal soon. But again, go to your best legal advice. Like, this is not legal advice. Try to talk to a legal counsel. But in general terms, I would say everything is going to be on your operating agreement, and the way the operating agreement is set up, that will be kind of like the best way to approach that. There are benefits. Again, we are a production that also have like the strength in finances, but it really depends on what are your strengths, right? I think like when we are in this industry, there are different. You partner with different producers because you want to complement the areas that you're missing in, right? So I think there's some benefit to that depending on what are your strength, or what are you guys as your production company strength. So yeah, I will kind of leave it at that.
And the operating agreement probably has the percent breakdown of how much each owner has. So what usually happens, and what we see on the loan side of things, is that when we're looking at your tax returns, everyone's going to get the same tax return for the LLC. What's going to be different is the percentage of ownership. And so you'll get that in the form of a K1, which is kind of like a W-2, but it's just for like when you're an owner of a business. It tells you how much income you've earned, net income at the end of the year. And so each owner will have that. So we'll take a look at that, and that's the income that we use to qualify you for, let's say, a mortgage or something. So I think it's just probably understanding your percentages, and maybe asking your tax advisor and your attorney how easy it to transition out of this if I decide to want to do something on my own. I've seen people be part of LLCs, and then they also have S corps. It's reported on the schedule of your tax return, and they need just like a separate page, like delineating all of the different partnerships and S corps, and so it's okay to have multiple. Don't feel like you got to fit in one box.
And just real quick to add to that, if this is your project, make sure you're the managing partner of that LLC.
Yeah, majority.
Right?
Yeah.
Like, you want to be the majority. It's your IP. You should keep it. So always, if you're going to bring somebody else, I would say just bring them at a lower percentage rate. That way you can keep control of the IP. You can keep control of all the rights of the production. And that will give you, at the end of the day, the kind of the decision making for you, right, and your project. So.
Yeah, something to also add to that. I'm not a finance expert, but as someone who owns a few LLCs with people as well as the nonprofit that are all separate, look like 3 to 5 years in the distance and have a real conversation about if someone gets a big job on something, or if someone has a family and you guys want to go travel with this company. Really think about those percentages you're giving out. It's really easy right now to be like, everyone gets 33%, 33.33, percent. But really get people's goals and objectives and make sure you're moving towards the same goal there. And outline that in that operating agreement. So literally, like, if this happens, then these people split that 33%, or that goes to the majority holder. So really make sure that operating agreement gets outlined. It's expensive to do a really good operating agreement, but if it's something you really believe is going to be a long-term sustainable goal for you, then spend the money and the time, because it will not screw you over in the end. Then I haven't been screwed over, but I've had a lot of these conversations. So just be honest about like what people are contributing as well, so there's no resentment personally too at the end of the day if you all share that percentage.
And one last thing, because this is just coming up in my head.
Yeah.
So I would say if you guys are thinking about tax credits and refundable tax credits more specifically, that is a whole nother ballpark that you have to consider, because depending on where you're shooting, let's say you open an LLC, which there's a clear misconception that you have to open up an LLC where you're going to shoot. That's not really the truth. You can open up an LLC and shoot in Delaware, or you can open a California LLC and shoot in New York. But if you want to apply for those refundable tax credits, if you have a partner on that LLC, if it's an LLC and not a C Corp, for example, you will need to have those members also file their taxes on that specific state. And so those tax credits, because it's an LLC, those will flow through their personal taxes and yours first. So they will pay first their personal tax liability, and then the remaining will be paid to your project. So this open up a whole can of worms that we can chat more about it after. But there's a lot of consideration depending on what type of financing or credits you're looking, or we call it soft money, you're looking to look into. Obviously, there are the rebates, there are the grants as well. That might be a little bit more simpler for the specific situation that you're looking at. So, yeah.
Okay, great. We have one in the corner there, and then I'll come back. Absolutely. So British and American co-productions, can we have multiple entities under one production, especially if we're applying for UK money? Can I also have an American LLC is the question.
So in this scenario, I would say you should open up a LLC. My highest recommendation is open up LLC per project, right? And so if you have a LLC on an S Corp with two different co-productions, then that should be, let's call it Film ABC, is owned by 50% your American entity and 50% the UK entity. That's completely fine. As long as you're just keeping it separate from, it's not all in one, like the IP's not sitting on your production. I think there's benefits of separating everything, and then you will be able to kind of just strategize better.
I'd also just do some more research on co-productions, because if you get a British partner, you don't have to manage the UK one. They can be your co-producer, and then you can just manage the LLC from the American side, or vice versa. But getting a good co-production agreement together and looking up the benefits of that might save you from having to always have two entities going, even if it's only for the one project. And just, a note about the LLCs, it costs you money to have that LLC, so just keep that in mind. So you'll need a minimum of $800 if you form it here and $300 if it's in Delaware per year to just keep it open and going. So just keep that in mind. If you're a little way before making money, just know you'll have to set that money aside to pay for it. Next question was over here. Yes. going to start one with her after this. We're going to talk and start doing one for CFA because this is my favorite conversation on earth. But go ahead.
Well, we love that because one of the things that credit unions also are known for is financial wellness. We want our members to just have great financial literacy, and we want to grow with you. So our team actually, we put on virtual workshops on all of these topics, and we would love to partner with you to bring one to this group, and we can tailor the content to whatever the needs are. So yes, the answer is yes, yes, and yes. We would love to do that. And that, I know, it flew by me too.
I know. Sorry, guys. We're in the wilderness, believe it or not. And then Gabo also, so his entire Glide team is fantastic at answering questions when you're working with them, or just like, hey, I need to buzz something by you, buzz in pun intended with the Beatles around. And so I just have to say we work together. Gabo and I work together a lot for our companies, and so you guys have been a fantastic asset to have with us.
Yeah, I mean, we are open for consultations and things like that, right? So if there are specific questions, we will be happy to just hop on a call and address them, right? So.
Same here. We're open for if anyone has questions on real estate or any of the products that we talked about. Feel free to visit the table downstairs and just write your name down, and we can follow up with you on any topic. I'm passionate about real estate or mortgage, so if you just want to, I was talking to someone earlier, if you're just curious, like where you're at now and where you need to get structured to be able to buy soon, let's crunch the numbers. I'm a spreadsheet girl. I love it.
Me too. Yeah.
So I will definitely help you with that, and just so you understand where you are.
Awesome. Thank you. We had one more question. Did you have a question?
Okay.
Awesome. Any other things last minute? Great. We're so
Oh,
yeah.
yeah. Do you have any, this is a whole nother topic, but any advice for setting up cooperatives, like with multiple filmmakers working together in sort of a profit sharing or nonprofit model?
That might be more for you.
Yeah, that's not the area that I specialize, but we can actually chat and kind of figure it out together. I think bottom line, I will say everything that is being with multiple partners, I think an operating agreement is always going to be key for regardless of what type, if it's a LLC, a C or S or whatever it is. I think that's the most important from a legal perspective. That is what it's going to cover you to do kind of, any bad events or anything like that, right?
Yes. Yes.
Yeah. Yes. And
Yes.
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 Yes. And can I actually tell you something really cool? Sorry. Plug our Spotlight credit card at First Entertainment. We actually give you a $10 credit every month off your streaming services. So
Great. So I can get the no ad version.
Yeah. So that you can splurge on the no ad version. But again, it's something that's catering towards entertainers because we know you need to watch content, right? Do your research. So
Except those that worked on those commercials. We really respect you and we love your work, and it's wonderful. Yes.
Yeah, mine's just really simple, really quick. First of all, thank you so much. This has been really a super beneficial panel. Is it bad to dissolve LLCs? Are there pros and cons? You mentioned having one for each production. I can imagine that could stack up. Is there anything bad about that being in your history?
I think if you, as Indy said, there are fees that you have to pay, and we call that like gross corridor, which is like the fee to pay yearly, which is the $800 if it's an LLC, and then the cost for filing tax returns and creative financial reporting, right? So that's kind of like the minimum level, and that can range depending on the production from $500 to like, I mean, if it's a big one, it can be $10,000 for a year, right? So I will say if the entity's not getting any income, if there is no activity, by all means close it. There's no reason for you to keep it. Again, you should write it on the operating agreement on what will happen when you're closing that entity, and how you will dissolve those assets, who is the owner of that asset afterwards, and so on and so forth. But if that entity is just keeping you like just getting expenses and not getting any revenue, I will say, yeah, go ahead and close it. And it's not that complicated, really. It's just like documentation that needs to be sent to the state and the federal and IRS. So.
And just really quickly, as lenders, we don't mind. We see that all the time. But when you're in the market to buy something, don't close an LLC that has all your income, because you need that 2-year history. And if you close it while you're applying, even if it had great income in the past 2 years, we can't use that income. So keep it open until you get that house, that car, whatever it is, and then feel free to do what you want. But just kind of also always be thinking about the timing of when you're using that income when you want to buy an asset.
And the last thing I'll add as a panelist, I've asserted myself into rather than a moderator, is that if you're going to open an LLC, do it under Delaware versus California. Not only is it cheaper every year, but Delaware has the best corporate tax rules and policies. What am I talking about? But no, I do know these things. And so it protects you more. So just open it there. That's my only advice. I am so happy we did this panel, guys. And we started our day off strong. Yeah, last question, and then we're going to wrap it. Yeah. Yeah, let me ask. Do we still owe the $800? We do. Okay,
Yes.
got it. If we film in California?
Yes.
If we film in California.
You will have to file the taxes where you film.
Yeah.
Like if you want to get those tax credit
Yes.
rebates or whatever,
Yes.
you're going to have to file the taxes
Yeah.
where your production, regardless of where the entity was formed.
So even if we shot in Delaware and opened it in California.
Yes, exactly.
Cool. Yeah. Vice versa. Cool. Yeah.
No, it goes back to because you executed the film here or in California, then yeah, you will have to pay for that year. But afterwards, you wouldn't need to because that entity is just living in its own state. It just depends on the state that you're actually like. Again, you can film and the entities in Delaware, you film in California, and you can file the taxes in Delaware, but you won't get any of the benefits of like potential rebates, tax credits, etc. Right? So I think that's where the kind of like the details matter of where you're shooting, what are you looking for. So you're looking for a tax credit, then you will be benefiting by just filing the taxes in California as opposed to filing it in Delaware, for example.
Awesome. Thanks, everyone. That's a wrap. We're going to take a break for about 20 minutes, and then we'll be back with the next panel.
Thank you, everyone.
Thanks, Meyoung and Gabo.